Welcome to the Building Web3 podcast. I have my good friend, Alex Bodie. He is a partner at Hack VC. Before we get too deep into everything, tell us what is Hack VC if anyone's unfamiliar.
Yeah, first of all, thanks, Jax, for having me. And spoke with my compliance officer right before this. So anything that I say is my take. It's not hacks and it's not investment legal tax advice. Okay, so now that we got that out of the way, what is Hack? So Hack VC is a Web3 venture capital firm. We partner. We like to partner on and off chain at the earliest stages. So think like pre-seed to Series A with hackers that are building the future of the internet. And there's really three things to know about us. Our partners and co-founders they like to say they're crypto OGs. They've been in the space for a long time. They're super experienced. Hack was started in 2021, but the firm's only a couple of years old, but the founders have been among the earliest institutional investors in blockchain. So Alex Pack, he's one of the co-founders and managing partners. He's been investing institutionally in crypto since 2014. He actually started the Web3 practice at Bain Capital. They were one of the first major private equity firms to have a Web3 practice. And then he started Dragonfly, which is one of the largest crypto VCs in Asia. So combined, the two managing partners, they've invested in hundreds of deals. 30 of them are unicorns. There's 16 of them that have multiples over 30x. So yeah, that's about a little bit about Hack. That's point one. The second one is we're really thesis driven, and we're really focused on like what we do best and where our expertise is. So we focus on infrastructure investing, again, early stage, pre-seed to Series A. And even within infrastructure, we tend to have like very strong theses and opinions. We invest in like deep tech, financial infrastructure, DeFi, and the intersection of Web3 and AI. And I'm sure we'll get into a bunch of those topics in this conversation. But yeah, we don't do everything. Like we don't do NFTs, metaverse, gaming, enterprise. We stay focused on our theses, and which are informed by like fundamental research and doing things on chain. And yeah, I would say we're like known for catching categories early. We invest oftentimes before things have a name or a narrative around them. And then
Yeah,
finally, oh yeah, go
I do
ahead,
want to get
Jax.
into that, like how, and maybe we'll get into it later, is how you identify those opportunities before there's like maybe deep in before it was deep in, or, a particular, vertical before, it has a name stamped on it by Masari.
Yeah, exactly. So Alex, going back, like he was investing in like alternative layer ones before there was like an alt layer one or like smart contract platform kind of name behind them. Early investor in like Avalanche, Polkadot, Near. And then when the Ethereum Foundation, we can definitely get into this, when they made the decision to like modularize and outsource different parts of their blockchain to other teams, no one knew what it was like, what it would be called. Like now it's layer twos, but were they like roll ups? What was another word for it? Like plasma or so, like there are all these different terms, but Alex was investing early on in like, I think like three of the four big like L2s. Um, and so I think the team does it by just like, it's really important for us to stay on like the frontier of what builders are actually building. So we have this team internally. It's a group of technologists and researchers and coders that have built out this institutional grade infrastructure platform, and it allows us to do things on chain to provide TVL or to trade or to stake or run nodes. And so we have deep experience with the tech itself, and we also hire people from our portfolio companies. So I think that allows us to be like, okay, that is the type of infrastructure that's going to be needed in order to like take this mainstream, for example. And not being scared to invest in it, even though we can't perfectly put it in like a category. So yeah, that's a little bit of how we do it.
Yeah. Yeah. And real quick, before we get into kind of the current state of Web3 funding, which I definitely want to get into, you mentioned like pre-seed all the way to Series A. And I feel like, for maybe more normal people like myself, we hear these terms and we're like, what does that mean? We'll see like 35 million on the news. So could you just walk us through the different like tiers? Like what does that comprise? Like what's a pre-seed and what's like a Series A in terms of like fund size?
It gets fuzzy in venture. And by the way, like My background is like in Web3, or sorry, in in like liquid Web3 and then TradFi before that. So I don't have like the traditional VC experience, but it's my understanding that in like Web2 VC, things are a lot clearer. In Web3, like things go liquid earlier, and is it like a first round funding? Then it's typically like seed. If you're incubating and just doing like a little bit of a round with angels and like close friends, and maybe you'll invite like a VC or two, maybe that's pre-seed. Whether you have a product built or not can kind of determine, and like of course the pricing and valuation. So it's kind of a little bit fuzzy, but we
Fuzzy.
like want to be one of the earliest investors, in the protocols. And if they've raised one round and then they're raising the next, like we might call it a Series A. Um, and then usually like they'll launch tokens, right? Like, and then after that.
But first, let's talk about our amazing sponsor, HiveMapper, who helps make this show possible. They're keeping maps up to date in a really clever way. All you need to do is drive your normal routes with their smart dash cam installed. No extra routes, no extra hassle, just drive like you always do and get rewarded. Join HiveMapper and keep the map fresh for everyone. Yeah, so now I want to definitely get into the current state of Web3, like venture funding. And I also want to kind of preempt, a lot of people like VCs get some hate online, but like talk to us really quick about like kind of what VCs really bring to the market. Cause like, it's tough to bootstrap a business from zero. So talk about one before we get into the current state, like what's the value like VCs bring to the market? And then let's talk about the current state of funding.
Yeah, I feel like there, at least in like 2024, right, there was a lot of talk of like low float, high FDV tokens, like these VC backed coins. And I mean, I think that is fair. Like we'll talk later on in this episode, I'm sure, about like modular ecosystem growth around like Ethereum and all the different protocols. A lot of them launch tokens, and low float, high FDV, a lot of them were backed by VCs. A lot of these teams built in the bear market, and like they're complex technologies and they needed funding to get started. And like that's what VCs do, like, right, they take on that risk. I think a separate conversation but related is like improving on the token model and how tokens launch. I think you do need to have lockups on both the VCs and the founders. But then in terms of how you actually release liquidity to the market, like maybe there could be some better ways, whether it's performance-based milestones or liquidity-based milestones. So it'll be interesting to see like how token structures evolve as the market matures. But I think it's like a fair criticism, right?
Yeah.
Yeah.
So let's talk now. We talked about like the market in general and the VC role in it. Talk to us about the current state of venture funding and like where are you seeing the markets these days?
Okay, so for VC funding, the last quarter we had obviously was Q4 of 2024. In that quarter, crypto VC investment rebounded to the highest level in 2 years. So there was $3.5 billion invested across over 400 deals. So that sounds like a lot, but that's still significantly behind the peaks in Q1 of 2022. In Q1 of 2022, there was $12 billion invested across over 1,300 deals. So we're 70%, right, off of those highs. And those highs in Q1 of 2022 were like months before the Terra Luna collapse. So why is like VC, I guess, so far behind, or where is this gap coming from? I think part of it is there's still a continued absence of traditional VCs and institutional investors, especially in the US. Although, like, I think we're starting to see interest coming back. Investor confidence is rebounding with the new administration, and hopefully, there's going to be improved regulatory clarity that everyone likes to say that'll bring the institutions in. Um, and then I think also it is kind of natural for early stage private markets to lag behind liquid. So in liquid, like with Bitcoin and Solana, they've both just this month, right, reached all time highs. We're going to see early stage VC like kind of lag that, and that's typical of every cycle. So I think in 2025, VC funding is going to accelerate. Traditional players are going to come back online, and maybe we'll eclipse the highs that we saw in 2022, but we're still pretty far away from that.
So we've got the current state. Talk to us a little bit about like some of the trends that you see. Is it this like return to VC? What do you see kind of going on from like a VC funding perspective? Are there different narratives?
Yeah, the sectors and categories of interest. Right now, some of the hottest ones are like around agentic infrastructure, stablecoin payments and remittances. The layer one trade is still a popular one. We think that the crypto AI intersection is going to be the largest category by dollars invested from early stage VCs in 2025. So that's kind of like our prediction. And yeah, I think the things that are out of favor right now, NFTs, gaming, even like restaking and shared security is a little bit out of favor. Um, but yeah, that's kind of just like from a sector perspective where we're seeing things in the market.
And then from you guys only invest in certain verticals. Like, what are some of the themes you guys are particularly interested in?
Yeah, the three themes that we're investing in right now, one is that intersection of crypto and AI. And the thesis here is that next generation models and agents are going to massively disrupt both Web 2 and Web 3. And decentralized infrastructure, like we love to talk about the word decentralization, but that infrastructure is going to help solve some of centralized AI's biggest problems, including like censorship, cost, access, and programmability. So that's one theme. Another theme is around like DeFi and real world assets. Again, next generation financial markets, it's going to be built on blockchain rails. It's going to use DeFi, smart contracts, and blockchains themselves. And that'll be both real world assets, tokenized versions of those, as well as crypto native assets and tokens. And then finally, the last category is kind of just like general Web3 infrastructure. So investing in deep blockchain tech, different layer ones, layer twos, middleware, developer tooling. We basically think like infrastructure is the biggest, like best value accrual sector in where we are in this like early innings of a tech revolution of Web3. So we do heavily invest in infrastructure. And I think, as I mentioned before, a lot of the investments within infrastructure, more specifically, have been around modular blockchain infrastructure. So shared security, restaking, data availability, sequencers, bridging, stuff like that.
And it's always tricky because the flavor of the month changes a lot, but it probably in the current like zeitgeist, modular is kind of a narrative that people are like poo-pooing a little bit. Like, how do you guys keep your conviction in modularity? And if you are, like, how do you keep your conviction in these like ever-changing landscape of like crypto Twitter being like, this stinks, this is great?
Yeah, well, I think we actually just Alex Pack and I just wrote an article about this, like about Ethereum's decision to modularize and whether it was a good idea or not. So we spend a lot of time thinking about those things and doing research and try to like assign data to instead of just like thinking from. We do think first principles, but if there's any way we can use data to help back our research and our theses, we do that. But I would also say we are not like exclusive to just the Ethereum ecosystem. We're not ETH maxis. We've done like a lot of Solana focused deals. One we actually just announced this week soon, which is bringing the SVM to like any ecosystem. We led that round. And so we do a lot on Solana too, and other blockchains like Cosmos too. So yeah, I think we try to like just stay open minded, but also like if our theses change, we need to have conviction in why they change, and it's not just like a narrative of the month type thing.
Yeah, and everyone can go back to the Soon episode. I think that was an interesting one. If I'm remembering it correctly, they also brought the co-founder of Una, so it was like a dual, like, scaling with the SVM podcast. But I want to go back because in that article you talked a little bit about like how Ethereum's evolution was very similar to AWS. For people that weren't able to read the article, could you talk to us a little bit about like how you guys made that comparison, or like where you kind of see Ethereum's decision to modularize?
Yeah. Okay. So yeah, this was the article Alex and I wrote. We explored Ethereum's decision to modularize, and the motive behind even writing this article was like it was being blamed on crypto Twitter for a lot of ETH's disappointing price action this cycle, and so we wanted to like probe into whether that decision to modularize, if it was actually driving down ETH's price, and whether we could like find some data driven arguments to make. Okay, so just like quickly, the background. ETH started obviously as a monolithic chain like Bitcoin or Solana, meaning that it handled all aspects of a blockchain: execution, settlement, consensus, data availability. But in 2020, Vitalik and the Ethereum Foundation made this like very bold and controversial call to unbundle those pieces of the Ethereum infrastructure stack. And so they intentionally let other projects and builders build these services and put them together in the end state in like a composable way, which is why it's called modular. So obviously there was a lot of roll-ups and layer twos. Now there are like hundreds of them, but there's also all these other like technical services that are competing with one another. And these services originally were kind of like exclusive monopolies to the Ethereum layer one. Okay, so in this article, as a thought experiment, we were like, can we come up with a Web 2 comp to like kind of emphasize like how bold of a decision this was from the Ethereum Foundation. And we decided on AWS, Amazon Web Services, which is actually like a pretty good comp. It's, if you think about it, it's like the centralized world computer. Ethereum is the decentralized world computer. So AWS, what if they decided to focus on their two core original businesses, which were storage and compute, instead of building out dozens and dozens of other services that AWS now offers today? Well, if they did that, if they just focused on it, they would have missed out on a massive revenue generating opportunity to like kind of like lock their customers in, upsell them on all these other services and not allow them to, like, it's very hard to integrate with other providers outside of AWS. So AWS has been highly successful from a revenue perspective. If you look at their market share though of the like compute market, they've gone from 100% to 35% over the past decade. What if they took like a different approach and they encouraged developers to come in and build on top of storage and compute and create this like great, vibrant developer ecosystem that was like interoperable and all this stuff? That could have created like a great situation. But AWS maybe would have more market share today. But they probably would have lost out on those revenues. So that was kind of the thought experiment. It wouldn't be worth it for AWS because they're a for-profit public company that's trying to maximize shareholder value. Ethereum's not that. Ethereum's like a decentralized protocol, and you're trying to optimize for like the most usage and to be open and like want people to build on it instead of like short-term fee capture. And if you look at Ethereum's market share, maybe just in terms of like DeFi TVL, it's gone from 100%, not to 35, but to like 60 to 70%. So like that's pretty good. Obviously like revenues have gone down and we can talk about that, but from a market share perspective, Ethereum's done exceptionally well.
Yeah, it's quite interesting because I was at Google, I believe at the time that they rolled out Kubernetes, and it seemed like the going philosophy for big tech is it's like if you're not first or second in the market, you are trying to build some kind of interop solution to break those monopolies. So I'm curious, like, Ethereum was like very dominant in the market and probably still very much is. Like, should it, like, from your perspective, should they have broken up in and gone to like the L2 solution, or what was your guys' like ultimate conclusion there?
Yeah, I feel like if you are optimizing for revenues, I think it's indisputable that layer twos are like a parasitic to Ethereum in terms of revenues. But in terms of kind of like maintaining market share and developer adoption and stuff, like EVM is still, we know it's not the best, that and Solidity aren't the best languages, but people still use it just because it does have that network effect. So I do think that first mover advantage for Ethereum is still pretty strong. Um, I mean, we see all the issues that the EF is having now, and maybe they unwind it. Maybe they start to prioritize scaling the layer one itself, which I feel like is also like a good, a good plan in addition to kind of this modular thing that they have going on as well.
Yeah, now I definitely want to pivot into talking a little bit about how you guys view crypto AI intersection, because I feel like this is one. If you go into Kaido any given day, it ranges from like 40% of crypto Twitter talking about it to maybe 50%. So like, what's your guys' thesis there? And I know you guys were really early because we were one of the few people talking about like agentic things, 7, 8 months ago before it was really hot, and you guys were way before that wave. So talk to us a little bit about your guys' view of that sector.
Yeah, our thesis here is that the protocols and the developers that are being built right now at this Web3 and AI intersection, it represents the most disruptive technical innovation that's happening right now in startup world. So together, these two technologies are enabling everything from tokenized data and compute marketplaces to these autonomous AI agents that are going to transact value and do business on their own. Let me actually share my screen because I think people talk a lot about the narrative, and there's not like a clear kind of like outline for what it looks like. So when we were doing some thesis building internally, we built this out, which is our vision for the crypto AI tech stack. And on the bottom here, we see the entire suite of centralized AI, which is now being rebuilt in this like open source modular way. You have platforms for sharing and crowdsourcing GPUs with like Exabits and IONET. And then you also have the same thing for data with Grass, and also like open source models with Sentient. And by the way, all of these are like $100 billion markets. And then on the top, we see the promise of like novel apps for AI inference on chain, for AI agents that are truly financially autonomous. So we basically laid out this map and we made investments at every single one of these layers, except maybe the top one, customer apps. We don't do that. We're more on like the infra side. So yeah, we've been one of the most active investors in this category to date. There were five venture-backed AI unicorns that were minted last year in 2024, and we were early investors in four of them. So two are in the public markets, IONET and Grass, and then there are two in the private markets, Sentient and Zero Gravity. And Jax, I know you're like very familiar, right, with the Zero G team. But yeah, this is our vision. It's opinionated, and I think it's like subject to change. But this is kind of how we're viewing that intersection and kind of the different layers that build upon each other to get to this like final state of people interacting with these user kind of apps at the top.
Absolutely. And people should definitely, one, like if you're only listening to the audio, go to the YouTube, go look at the slide that we're showing right now. Obviously, go listen to the Zero Gravity podcast, and they can also check out the Theoric episode that we did. So let's talk a little bit about, where you think value will accrue in the kind of AI stack, because we have all of these things, AI agents, consumer applications. Do you feel like it's any particular area in these layers, or you think like, hey, AI agents are going to be big, as is data availability?
Yeah, I think that I think AI agents are going to be big. Like where you're going to you're going to need the infrastructure, and like the apps are going to have to pay for the infrastructure that backs these AI agents, and a lot of that still needs to be built. People might use like agents as a service and like not want to build their own. And these agents then like they rely on models to be trained, and then the models rely on data to be trained, and the data needs the compute. So I think all of these like uh are going to like generate revenue on their own. It's kind of unclear exactly like where in the stack is going to accrue the most revenue, but like I mean even just take like Grass with open source data. You have 2.5 million people that are scraping the internet every day to get like the most up-to-date data for models to be trained on. And who's going to pay for that? I think Web3 protocols like are going to pay for that data, but also just like Web2 companies are probably going to also pay for that data, because you have like a lot of the power is being held within just a few centralized companies that have the power to scrape all that data. To be able to tap into a decentralized network is going to be huge, and all the people that are contributing that bandwidth will get paid to do that. So I think at each of these layers it's going to generate revenue like endogenously, but also like outside of Web3 as well. So yeah, I guess hard to say, but I think revenue generation could happen at every single one of these infrastructure
Absolutely.
layers.
So we've got the intersection of AI and crypto. One of the other areas, I would say there's probably three, and you might disagree with me on this, but there's probably three areas of crypto that have had serious product market fit. One is stablecoins, two is DeFi, and then three, we're seeing it with AI. So let's go into the DeFi use case, because this is another area where we've seen just massive investment. What are some of the most exciting things that you're seeing in the DeFi sector?
First of all, I completely agree with what you just said about the product market fit. DeFi and stablecoins like really are the first true product market fit of crypto stablecoins for payments, and then also like dexes and trading of meme coins like has also been super popular. In Q4 the biggest news for crypto of course was the US election. The second biggest news item in our opinion is Stripe acquiring Bridge, which is like a B2B platform that enables fintechs and neobanks and merchants to accept stablecoins via an API integration. And that deal happened for $1.1 billion. And it's just a really positive sign for the space overall, and it indicates that crypto is really starting to be used in the real world for payments. And it also validates this whole one of our core investment themes, which is like DeFi, real world assets, stablecoin based finance. Yeah, we love investing in categories that are too early to have a name, and the industry is now kind of starting to coalesce. Have you heard of this term PayFi?
If I have not, let's hear it.
Okay. Well, I think like I've heard some people mention it, but it comes from like the original vision of blockchains, where in like this the Bitcoin white paper from 2008, Satoshi describes Bitcoin as a peer-to-peer electronic cash system, and Bitcoin was supposed to be used for payments for real-world usage. You can buy your coffee with Bitcoin. That obviously was impossible like in the early days because there was no infrastructure to support it. Also, Bitcoin was super liquid. It was hard to get. It's really volatile. Like you don't want to pay for these things in Bitcoin. But the idea is, Satoshi had that idea. Now things are different. We have scalable layer ones that are fast, allow for cheap transactions. We have stable coins, so you can pay people without taking on huge market vol. Yeah, you have now all these DeFi protocols that have built financial primitives like decentralized exchanges for trading stable coins and lending markets, so you can bring financing, for merchants and stuff online and on chain. So I think it's like maybe boring to some about stable coins, but I do think this is like one of the most exciting, promising developments within like DeFi, stable coins, PayFi, whatever you want to call it.
Well, can we actually real quick talk about like why stable coins have hit so much product market fit? Like most people, I feel like unless they've lived internationally, they actually don't understand like one, why like regular people would do it. Maybe they think like, oh, okay, like you live in Venezuela, you're going to swap bolivars for US dollars because they're more stable. But like, why are big businesses using stable coins?
Yeah, I feel like it's for like the global 24/7 365 lower fees, not having to go through the traditional finance rails, which are a pain in the neck and take days, and you're doing manual confirmations. I mean, like even with our funds, right? Like maybe I shouldn't be talking about this, but like when investors, when they subscribe and they do capital call, like they're wiring money and it takes days and we're emailing, hey, did you get it? What's the bank instructions? All this stuff. Um, it's just so much faster and easier to use stablecoins. Obviously, we have a lot of onboarding, to do. But that's why the Stripe and Bridge acquisition was so big, because you have like a traditional Web2 fintech that like acknowledges the benefits of stablecoins, and like they're adopting it into like their own payment solution. So, yeah, I think.
And usually when you transact with like let's say a credit card, and we're not even talking about a wire, you're pretty much getting like a 3% tax layered on there somewhere in the stack. And then if you're sending a wire, it's usually around like $45 has been my experience. So it's like, probably like you can save like probably my guess would be like trillions of dollars if people could just move to stable coins. Of course, there's like chargeback issues. Well, that's probably something that we'll have to figure out, but it's one of the most promising areas. So okay, we've got stable coins. What other areas of DeFi? Because we talked about like restaking, things of that layer, but we kind of see that narrative kind of cooling off. What do you think like value will accrue, or what do you think is like really interesting? Is it RWAs? Is it actually restaking? What do you think?
I think, yeah, it's hard to say. All of these different areas, I think, have promise for the cycle. I think DeFi just in general was maybe not ignored is the right word, but people were scared to like build in DeFi in the last administration. And so I think that's changing. There was like this regulatory overhang on the entire DeFi sector. And now you see teams getting, they're experimenting with different token models, passing back revenue to token holders. I think that's exciting. I think there's still a lot to build to make DeFi accessible to the mainstream. Like think of something that it's like a user-centric app that looks like a traditional financial app, but it actually uses DeFi on the back end. I think that idea is pretty cool. I actually just saw before this, like mobile crypto wallets were at their all-time high in like December or January or something. So I think a lot of this, like I use my Bank of America app on my phone. I use Venmo on my phone. So like the more kind of mobile, easy user interfaces that use DeFi is going to be good. And then I think another interesting catalyst that DeFi has in general are yields. The Fed had their meeting today. They kept rates unchanged, but I haven't looked at the latest what the markets are saying. But like if yields go down in traditional markets in 2025, DeFi yields are going to look relatively more attractive. So that might bring back more attention to the DeFi sector as well.
Yeah, it's quite interesting, and I'm very bullish on this idea. Well, I'm like an infrastructure guy at heart, so I suspect that like my parents won't know that they're using crypto, but in the future, like the Apple phone, they might just be using stablecoins on the front end. Like she's not going to know she's like on what network, and it doesn't matter because like it doesn't matter how Venmo sends the money to her. It's all the same. So that's where I kind of see things. Like people don't care that Facebook's written in PHP; it just works, and that's where I think.
Exactly. Like when I use Venmo and I send the money back to my Bank of America, I'm not asking them which banks they use to like wire that money. I just check in my Bank of America app. Is it in there? Is it in my like wallet? Yeah. Okay. I'm good.
Yeah,
So I agree.
simple, simple. So
Yep.
we talk to a lot of aspiring founders and builders, and obviously established builders as well. Like, what are the things you find that people are really struggling with when your portfolio companies are like trying to go to market or really trying to grow themselves?
Yeah, I think a lot of it is around like go to market, whether they do like community driven or do the business development route or some other method. How do they find the best talent and generate buzz so that developers build on top of what or like adopt what they're building? I don't know. We try to help our portcos with these challenges. We have a couple ways that we do that. One is with Hack Summit. It's like this 10-year-old community that we've had. It actually predates Hack VC. One of our founders started it. His name's Ed Roman. You interviewed him on the Zero G podcast. But yeah, he has this developer community. They have an annual conference, a jobs board, hackathons, and there's over 130,000 engineers that are part of it from over 150 countries. So it helps our portfolios. We have them go to these conferences, get on stage. They get exposure to tens of thousands of developers that then could be users and contributors to their project. And then the other is through that Hack Labs, that platform we have where we do a lot of stuff on chain. And we're usually like the earliest users in the protocols we invest in. So helping like, I don't know, partnering with them on that initial participation to get their protocol up and running to help bootstrap network effects and de-risking the launch is helpful for like our investment, but also our portcos love it too. So yeah, I think it's all around go to market and like what is the right strategy for each particular portco and how do they achieve that?
Absolutely. And because you guys are investors, you probably speak to so many projects. We always like to ask our guests, what is an area of the like startup ecosystem in Web3 or in general that you feel like is under addressed? Like we're always looking for startup ideas for builders to potentially work on. Like where do you think would be a good place to build a startup?
Well, okay. One of our predictions for this year is that there's going to be like a dozen or more non-crypto people or brands or companies that launch their own tokens. Um, and really, this was kind of the idea was from Trump coin, or Trump's meme coin that he launched just before inauguration. It's like tens of billions of dollars, and then Melania launched hers. And like whether they have fundamental value or will have value years from now is like kind of unimportant to us. I think what's more interesting is like now anyone in the US, which is like the center of capital formation, now has the implicit permission to launch a token. So now we've entered this like tokenization of everything era. So I'm thinking of like infrastructure for non-crypto people or companies to like easily launch and get up to speed on like their own tokens. Something that's like no code, no tooling, can deploy on multiple blockchains, has a way for them to manage it on the front end. Um, and maybe something like this already exists. But that
Well,
was kind of one thing that I
it's kind of interesting because it's just like it's essentially almost like gambling on somebody's not gambling but maybe investing in somebody's clout score where you're like, I think this influencer is going to be big, and if there's essentially like we're essentially creating derivative assets of people's like brand.
yeah. It could be like Coca-Cola or it could be
Starbucks
LeBron
coin.
James,
Yeah.
yeah, yeah,
Honestly, Starbucks coin would be great because yeah, I know Starbucks has fallen out of favor, but for a while they were
yeah.
like one of the biggest like fintech successes because of their like mobile app.
To- Totally. And we know what happened last cycle with Starbucks and everyone was so excited like their Polygon like NFTs that they were launched. But I think that's a good example. Like they're going to get it wrong, at first, but at least they're like experimenting and trying. So, yeah. I think there's going to be more
Yep.
of that this
Pushing the ball
cycle.
forward. So, okay, milestones and developments. Like, what can people look forward to from Hack VC? Or do we have some cool research coming out? Like, what's coming down the pipeline?
Okay, yeah, a few things. Well, one is just like our portcos, like not to just pump them up, but like there's a lot of great mainnet launches and token launches that are going to come this quarter, so I'm pumped for that. We have a bunch of people going to ETH Denver, so hit us up if you want to meet up there. And then one other thing that we're excited about is this video series we launched called the Hack VC Gigabrain Sessions. And one of our research partners gets up in front of a whiteboard with the founders of our portcos, and they go deep into the tech architecture and like other technical details. So we launched 2 episodes already in 2025. One's with Hyperlane, which is like a cross-chain liquidity protocol, and then the other is Initia, like a network for interwoven rollups. And both of them were great episodes. You would like I learned a ton from them. Zon from Initia in particular is a great teacher and educator. But yeah, it's really meant for like both developer and investor audiences. So yeah, check those out. Those are great, and we're going to definitely be doing more of those.
Absolutely. And finally, where can people, find this information, find some of your reports you guys are doing? Like, are there any social media links you want to call out? Where can people connect with you?
Yeah, our website, hack.vc, we post all of our research articles there, including that like Ethereum modular one we discussed. The videos I just talked about, they're up there. We also do investment memos, like why did we invest in this thing and what's our vision for it. We're active on Twitter. Our handle there is hack_VC. And yeah, definitely reach out if you want, if you want to work with us or collaborate on something. We'd love to hear from you.
Absolutely. Well, I'll put all the links down in the description. So everyone go get involved with Alex, go get involved with Hack VC, and let's continue building the future of on-chain.